Now, I get it. Some of you guys want to buy into higher yielding stocks and ETFs, but you don't want to buy into something like this, an ETF, for example, like TSLY, that has offered massive income every single month to investors, but basically since inception has been decaying and decaying. Now, NAV erosion is something I get questions about all the time. A lot of investors always ask me, are you afraid of NAV decay? Are you afraid of NAV erosion? And I always answer them and tell them that for the most part in my portfolio, I for the most part don't really buy into strategies that could potentially offer the sort of NAV erosion I think most investors are asking about. So to make things very simple, I'm going to share with you guys 5 relatively high yielding ETFs that since inception have offered no erosion, have actually grown in price and paid investors massive distributions every single month. Yes, there are some names out there that since inception have actually grown over time, made your investment go up, but have also at the same time paid you nice amounts of cash flow every single month. So if you want to see which 5 ETFs these are, make sure to stick around, drop a like down below, and let's go right into the first one. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So the first ETF that not only hasn't eroded over time in price, but it's actually went up in price, and side note guys, I'm going to share with you all the charts you need to see, is the Goldman Sachs NASDAQ 100 Premium Income ETF, or ticker symbol GPIQ. Now, this is not going to be a video explaining to you guys why a lot of different levered names, for example, seem to NAV decay over time. We can save that for a different video, but simply put, it's going to have a lot to do with the underlying holdings that the ETF either buys into or references, and of course, the strategy that the ETF uses. Now, for GPIQ, it says seeks current income while maintaining prospects for capital appreciation. GPIQ offers exposure to the NASDAQ, but through a premium income strategy. Reasons to consider GPIQ, for example, it says seeks consistent monthly income, broad equity exposure with lower volatility, which for GPIQ, it offers diversified equity exposure to the NASDAQ 100 index and dynamically sells call options. Now again, whether or not an ETF dynamically sells call options or just sells options, one deviation out on the entire portfolio, there's going to be a lot of variations which you need to understand and ask yourself what you're looking for. Now sure, ETFs like this one aren't going to offer you a 100% yield, but for example, as of right now, GPIQ is offering investors like myself, because I personally hold this one, around 11.09% trailing 12-month dividend yield. Now, are there different ETFs out there that have actually grown over time and offer insane amounts of distributions over a long time frame? I've sort of yet to see that. But this ETF offers a nice juicy starting yield, offers consistent income, and also has not decayed at all. Now, not only has GPIQ, for example, not decayed, is actually up 23% since inception. So investors that bought into this one, like I said earlier, have not only had exposure to consistent monthly income, paying them every single month, but also their actual initial investment has went up over time. Another side note, maybe for a different video, is look at how fast GPIQ, for example, recovered during the most recent lows. This again has a lot to do with the underlying strategy. Another ETF that has not eroded or decayed at all since inception is the Goldman Sachs S&P 500 Premium Income ETF. The same exact strategy, only this one's offering exposure to my personal favorite index, S&P. Now again, the objective is the same, the actual reasons to consider investing is the same, but again, this one is offering exposure to the S&P, so it's not going to offer as much of a starting yield or a trailing 12-month yield. We're talking around a 9% yield more or less trailing 12 months, and I know a lot of dividend income focused investors' brains are sort of fried at this point because we're so used to seeing 100% distribution rates, 50% distribution rates, but again guys, come back to earth, realize that a 8%, 9%, 12% yield with an asset like this one that's also grown over time is not bad whatsoever. I mean, since inception, GPIX, the Goldman Sachs S&P 500 core premium income ETF, is actually up around 23-24%. So once again, just like the last ETF, you're not losing money by buying into it. The ETF since inception has actually grown over time and also paid you around 9% per year, more or less. Not bad whatsoever. Another ETF that's been great about not decaying, actually growing, but also paying investors around 5% yield per year. One of my favorite very low beta ETFs in my personal portfolio, Devo, the Amplify CWP Enhanced Dividend Income ETF. An ETF that buys into a curated basket of holdings, around 24 names as of right now, but then with that sells cover calls on individual names. Now again, Devo isn't the craziest or flashiest ETF across the market, but Devo has kind of stayed in its lane since inception, offering investors a consistent annual return of around 12% per year. Now, what's better than getting paid monthly income? Getting paid monthly income and having your underlying investment grow over time. Around 5 or 6% yield, like I said, depending on when you bought into Devo. But over time, this ETF, take it from me because I own a lot of it, has grown over time like crazy. Another ETF, this one's very popular with a lot of you guys, I'm sure. GPIQ, the JP Morgan Nasdaq Equity Premium Income ETF, an ETF that's paid investors anywhere from say 8% to 10% to 14%, depending on the time frame, but also has gone up in price over time. Now, GPIQ offers exposure to the Nasdaq, like a lot of you guys know, but then through that implements a disciplined option overlay on written on the money Nasdaq 100 index call options. Now, this is how this ETF can pay such big dividends every single month. Now, GPIQ has sort of been a poster boy for high quality premium income ETF, not only because it's grown over time and paid income consistently, but also its ability to recover when the market turns green again. Now, last but not least, JPY, of course, the JP Morgan Equity Premium Income ETF, an ETF that's becoming less and less popular in the community, especially as of recent. But to be fair, the ETF still has grown over time and offered investors anywhere from 8 to 12%, depending on what you're looking at. Now, again, I get it, an 8% or maybe 10% yield isn't all that exciting these days because of all the new strategies that are out there. But again, guys, buying into something that over time has not only not lost you money, but actually went up in price over time is something at least to be proud of. Now, stacking up all these different ETFs side to side and looking at them all from the longest time frame we have to go off of, from the ETF that's been trading the least long, October of 2023 more or less, I mean, all the ETFs total return are in the green. So you're not buying into these names and getting paid income, but losing as far as total return goes. There's tons of ETFs out there, we've talked about them time and time again on the channel, where sure, they're going to pay you a massive distribution every single week or month, let's say, but if you're losing money in the back end of things, what's it really worth? Now, that being said, even in the classy ETFs like this one that have actually grown over time as far as their price return chart goes and also paid income consistently, there's still several names out there that I like more or less. But for the most part, those are 5 individual ETFs that all, at least since inception as of filming this video, have went up in price over time but also paid consistent monthly distributions. So now that I share with you guys 5 different ETFs that not only have been paying monthly distributions ever since inception, but also have not lost you money as far as price return goes, I want to hear from you guys down below. As far as income strategies, income ETFs, whether it's stocks or ETFs, of course, that have not decayed whatsoever but actually went up in price, what are some of your personal favorite names? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.